What's up guys, welcome back to my channel. So recently I was learning technical analysis because even though you select the stock you think have a high potential, but it's also important to find a good timing to enter or exit the market in order to maximum your gain. So today I want to share two of the indicators I just learned, which is double top and double bottom. So double bottom is also called the W pattern, which means the stock price has dropped first and increased a little bit and then drop further. So usually a lot of technical trader will say you don't buy in the first drop, but you wait for the second drop. I look at some examples, like today there's an example of Under Armour stock. After the stock has formed the double bottom, the stock price begins to going up now. And I think other than focusing on whether this pattern has formed, it's also need to look at the volume, whether there's increasing volume in this trade to see like how far the stock price would go. Since stock trading is a battling between the buyer and the seller, I find there's maybe some psychological reasons behind it. I will take Apple stock as an example. When the stock price, assume it dropped to 200, and I was thinking about should I buy it, and after I made my mind I want to buy the stock and I place the limit buy order in my broker-dealer account. For some reason it didn't go through, or I just placed order too late, so I didn't buy the Apple stock at $200 and the stock price goes up to like 250, and later on after a week the stock price dropped again because of some external reasons like some negative news coming, and the stock price has dropped to $210. So this time, although the price is a little bit higher than the previous one, but because of the psychological, I will have a fear of missing out state of mind, and I think this time at 210, if I don't buy it, I will miss the opportunity. So then I opened my broker-dealer account and press the buy button, and then I bought the stock at 210. And since a lot of traders does this kind of action, the stock price goes up further. And it's interesting to notice that when there's a W bottom, a lot of times the second bottom is a little bit higher than the first one, because a lot of the traders, they don't want to miss the second time. And the same situation applies for the double top, which is also the M pattern. Similarly, I also use Apple as an example. So when Apple stock price reaches 300, I want to sell it, redeem some short-term profit to buy a new iPhone 11. So I placed a limit order on my broker-dealer account at $300, but again I didn't sell it out and the price dropped back to $250. So after that I was worried about how long would it take the stock price to go back to 300, and after another week the stock finally goes up to 290, and at that time I would say, oh, this time I need to seize this opportunity because I really want to buy a new iPhone 11. So then at the 290 I set the limit order at that point, and then I sold the stock. And because a lot of traders did a similar operation, the stock price dropped further. I use a filter of double top and I find Johnson & Johnson stock, the stock price at this case. And a classic example of double top would be DJIA in the period of 1936 to 1937. It took almost a year to form the double top. It's also noticeable that when the price level formed the second top, the volume is significantly less than the volume of the previous top period. So that's led to the price level significantly decrease in the December of 1937. Although double top and double bottom works for a lot of cases, but I believe there's a ton of cases that this indicator just failed. And also because nowadays there's quant trading, I believe a lot of institutional investors will use a quantitative model to identify those patterns and then place a trade. And the machine will trade faster than human being and be more rational. And I also heard that in some cases, when the institutional investors want to trap the retail investors and want to take advantage of the individual investors like us, So they will fake these kind of patterns in order to lure the individual investors to come in the market, and then they will do the reverse operation. So in those cases, I believe this can only be one indicator that we take for reference, but will not be the main factor that triggers the trade decisions. I think it's also important to combine with other technical indicators like RSI and MACD and look for a longer period of time, and also the fundamental analysis and the macroeconomic trend to see what's gonna happen in the long term in order to understand the potential risk if you want to add position or short based on these patterns. That's what I learned about double top and double bottom. Please let me know what do you think of these indicators, your experience about whether those indicators would work or not. I would love to learn more about those patterns. So thank you guys for watching, and I will see you very soon. Bye.